Yes, yes, yes. I love that intro. Very nice work, producer Mox and associate producer Diggs. Great to be here, guys. What are we? Monday, July 13th, 2020. Second half of the year. Q3 has started. Really excited about our guest today. He's been on the show before, and it was one of our best shows. Might have been our best show. I am biased because he is related to me. We are first cousins, but he's a fantastic fellow, great gentleman, and a scholar of the accounting practice. Really, really excited to have him on. Let's bring him in right now. Julien Grenier. He is a partner. He's a CPA. He's a CGA. He's agricultural team manager, and he's a partner at Talbot Associates. Bienvenue. Welcome, Julien.
Hey, Rob. Happy to be here.
Yeah, last time was a fun one. As a reminder to the viewers, I'm Rob Tatro from robtatro.com, portfolio manager here at Canaccord Genuity Wealth Management and at the Tatro Wealth Advisory Group. If you're watching on YouTube, take a second to subscribe. We are approaching 2,000 subscribers, and I would love to get there soon. 2,000 would be great. If you're watching on Facebook, share, send us your comments, like our page. We appreciate you guys following, and we love you guys, our viewers. Sorry, I kind of half interrupted you, Julien. I apologize for that. We had a good chat last time. It was a fun one, which is why you're back on the show.
Yeah, you know what? It was a whirlwind time last time I was on. I think we were both working from our basements, and it's really cool to see the production value, the intro, all that kind of stuff. Really, really fun. So you guys are doing a great job.
Yeah, thank you. Good to have you back on the show. You've been busy, I would imagine. Are you guys back in the office these days? You guys are...
Yeah. We actually just opened up face-to-face meetings again as of Monday last week, by appointment only. But yeah, it's been a fun time. It's been difficult. It's been a lot of phone calls with all the different programs and extension of deadlines. So people taking longer than they normally would have, but it's been really good. It's been really, really good.
Good. I'm happy to hear that. You guys are a great firm, and you are, what's the word I'm looking for? Resourceful. You're incredibly resourceful. So I'm sure you figured out how to coordinate the paperwork and whatever needs to be signed. And
well, we have a great team here. So it's a joint effort amongst everybody. And yeah, it's been an amazing response that we've seen in our staff and our clients, the understanding. So yeah, we're really, really blessed in that manner.
All right, let's go through the headlines here. So today, quite a bit of news. Today was an odd Monday because this morning when I was up, the markets were up a ton. They were up 500-600 points this morning. A really strong day throughout the day. So, and then the rally evaporated late in the day here. I'm nudging over so I can see my TV here in my office, but the TSX finished down 74 points to 15,639. The Dow finished slightly negative as well. So I don't like seeing those kind of days where you're up 600 and then that evaporates in the last hour or so. That means someone's taken profits. People are selling. There was a lot of profit taking. Actually, the NASDAQ finished down 2%, 226 points. It has been on fire this year, the NASDAQ. It's up a ton, all-time high. It's down 226 points today. I'd say the big news in Canada, for those of you that missed it on Friday, the jobs number came out. I do have the labor force statistics here for the country. For the entire country, unemployment rate, we added 960,000 jobs or so. Fantastic number.
Awesome.
During the month of, it's huge. During the month of June, we added almost 1 million jobs. Most of those were part-time, but regardless, employment, people going back to work. And we're going to talk a bit about that with you today, the CERB and all the different benefits that people can apply for and what the rules are for them. Unemployment rate went to 12.3%, so it fell. I can also say, and this is an important one, folks, the participation rate, so the number of people that are actively looking for jobs, inched up 2.5%. So that's really good in that the unemployment fell and the participation rate went up. Sometimes you get a situation where unemployment doesn't move, but 2% of the people stop looking for jobs. Well, that's not good, right? So 63.8 is our participation rate. In Manitoba, the numbers were really strong as well. Unemployment's at, I believe it's 11.1%. So really, really strong. We have one of the best numbers in the entire country. Our participation rate is also up quite a bit. Our participation rate is among the highest. It's at 65.5, 10% unemployment. I believe that's among the best in the country. A couple other headlines, Julien. I don't know if you saw this. Actually, comments on the job numbers, Julien. I don't know if you followed that closely or not. But...
Well, it's funny you mentioned, because we've had a ton of clients just talking about how difficult it's been to compete with CERB. right? Trying to get people to entice them back to work and things like that. So I'm curious to know if there's any studies being done to compare what the Manitoba government's done through their Manitoba return to work programs, if that's kind of contributed to any of those numbers or not. But we can definitely go over those programs in some more detail if you guys want to.
Yeah, Manitoba, I mean, our economy is really, it's consistent and it's isolated. We don't have any kind of major, I mean, we do have the aviation, and we have a couple manufacturing sectors, the insurance sector, but we don't really, we're not a one-trick pony here in Manitoba. So I'm not surprised to see our numbers being relatively flat. Tesla today was a huge gainer. But it also fell. It was up 14% early in the day, and it kind of fell back down towards the end of the day. Another news that matters if you're a sports fan, the Washington NFL team officially announced today that they are retiring their name and their logo after backlash. This is a long time coming. I'm a big believer in this. I think it was a long time coming, and I'm happy to see that. I don't know if you have any comments on that or anything else that's happening in the circle of change in the sports world.
No, absolutely. It's great when you're presented with a choice like that. To me, it's a no-brainer, right? They made the right decision finally. Too bad it didn't happen sooner, but they finally got it right. So that's great. There's still a few other sport teams left to go there, but yeah, happy to see that happen.
Yeah, I saw a comment by the Chicago Blackhawks that they're not going to change it because, in their view, they're honoring Blackhawk, who was an Aboriginal chief, I believe it was, and they're saying that they're honoring him by portraying him on the jersey and having the team named after him. I wonder if that'll change at some point. The other news that I saw that was kind of neat is Amazon. A lot of these tech stocks are hitting all-time highs. Amazon's like $3,200. It has doubled since March 23rd. The stock has doubled, and this is a very large company, as you probably know. In Canada, a couple. The big news in Canada is we're entering stage 3 in Ontario, Manitoba. Like, we have not had a case. If you're watching here and you're not in Manitoba, I believe our last case was June 29th. Is that right, Julien? I believe June 29th.
Yeah, in around, I think it's 14 days today. Yeah. So
we have not had a COVID case in 14 days. NHL, if you're watching this, probably not. But Gary Bettman, if you're watching this, we could be your hub city. There's no cases. I don't know if Manitoba would want it, though. Several hundred athletes coming from the U.S. to come here. I don't know. But no cases in 14 days. Congrats, Manitoba. Quick clap. Nice work. I think it's, aside from that, it's a bit of a slow time in the market right now. We're seeing kind of not huge news. People generally take July and August off in the market, so there's very little news. We're here every day. Obviously, we don't take days off. I mean, take some days off, but the office is open every day, obviously. Enough about me and enough about the market. Julien, you are my first cousin, full disclosure to anyone who's watching here.
Absolutely.
My mom and your dad are brother-sister, Annette Grenier and Julien Grenier. That's how the relation exists. But that's not why you're on the show. You're on the show because you're a whiz. You guys have been doing my taxes. I've referred business to you guys. You guys are fantastic at providing advice when it comes to this. Let's get right into it, Julien. Let's start with maybe we should start with a Manitoba budget.
Sure.
It was announced in March. 3 major changes. You want to take us through them?
Well, and that's the thing. It's like it's more so things that are unclear at this point, right? So we saw that in the budget proposed in March that they're proposing to reduce the PST from 7% down to 6%. That got canceled because of COVID and the impact that it was going to have. The other 2 tax things that we were seeing in that budget were probate fees were supposed to be eliminated, and there were supposed to be some changes to the health and post-secondary tax levy, which is a payroll tax. So lately we've experienced the fact that some of our clients' probate fees have not been eliminated when they were probating their will.
First, right?
We were expecting it to be July 1st, and so it kind of came as a surprise. It hasn't gone through royal assent yet at the province, so we kind of just took it for granted, and probably shouldn't have, right? You should never take anything for granted, but it has definitely impacted some of our estate planning. So if you have an elderly parent that you decided, I don't need to worry about probate fees because they're eliminated now, and maybe you have an ill parent or something like that, maybe it's time to talk to your advisor to double check to make sure that you've done what you can to avoid or eliminate probate fees. And just quickly, the health and post-secondary tax levy, that's a tax that companies have to pay when their payroll exceeds 1.25 million. So if your payroll is over 1.25 million, you have to report an additional form, and you end up paying an extra 4.1% on anything between 1.25 and 2.5 million. And I believe the other bracket, anything over 2 million, is at 2.1%. So they had proposed to change those amounts to paying those same rates, but at 1.5 and 3 million. Again, we haven't gotten any clarity as to whether or not those will be changed or not. So what we've done here as a firm, we've sent some messages to our MLAs and things like that to get some feedback, because there doesn't seem to be any official stance on if this is going to happen or not, or how that's going to work.
So let me get this straight. You got a payroll of over $1 million. So you're a healthy Manitoba company that's employing probably at least 20 people, I would say, right? At $50,000 a salary, that know, be 20 staff, give or take, and you're being taxed another 4% on all of your payroll.
Yeah, it's massive. It's one of the most sneakiest tax that people don't think about, right? Because it sneaks up on you, and it's not something your business is doing good. You got all your margins figured out, and then all of a sudden, bam, 4.1% extra tax. And people are always surprised to hear it, right? But unfortunately, it's there. It's just like any other tax. It's part of what goes into our.
If you're like in a service industry or like an advice industry where that's your biggest expense, that could be 4% right off your margin, right?
Yeah, I mean, a lot of times, like you look at companies that do a lot of freight and things like that. It's no wonder there's a lot of subcontractors in those industries as opposed to wages, right? Because this extra 4%, like that makes a significant difference in those margins, and to be able to compete in those industries, there's some tight margins there for sure.
Yeah. All right. Please take me through the Canada Emergency Wage Subsidy. So there's an update. Understand it. This is what do you guys call it? The CEWS?
Yeah, the CEWS. That's the way I say it normally, or the CEWS. But basically, that's your biggest wage subsidy program that people are using. And so basically, you're comparing your current month's sales to the same month's sales last year to see if you had a 30% reduction in those sales. Provided you are able to prove that, you're essentially eligible to get this subsidy back. It covers 75% up to a maximum of your employee wages. Okay.
How long is this going for?
This has been one since the start, basically, as well. But they're
extended into forever, or is there kind of an end date?
Yeah, so they keep extending it kind of 1 month at a time as they need to. So we haven't heard anything for the September period, but it'll be extending up until August. But the one question that we're getting, so this is a subsidy that's been around for quite some time, but one of the things that's sort of new, not new per se, but more in your face than ever before, is now when you fill out the application, you have to do a series of attestations. I've been impacted by COVID. I've had a drop of 30% sales, and there's quite a few attestations. And then there's this attestation around our section 125.7 of the Act, saying have you elected under 125.7? So from a layman's term, like, what does that even mean? Did I not? And so really what that's covering is that there's certain ways you can calculate your 30% reduction, right? So they said you're allowed to calculate it based on an accrual method. So basically matching your wages with when the wages were earned, or cash when you've paid the dollars to your employee. Okay, those can be different periods.
Creative.
Yeah, so you can't play around with those numbers. You got to, so in 125.7, there's one saying, okay, I'm accrual is default, but if you choose to do cash, you got to stick with cash throughout the whole period of CEWS. Or there was one for your sales. For example, you compare your July sales to last year's July to see if you dropped by 30%. But they had also introduced a measure where you can compare it to your average of January, February, average sales. That was for kind of newer businesses that were just starting up and things like that. So it kind of gave you another benchmark that you could compare to. Well, that too, once you've picked that you want to either compare to same month last year or to January, February, the current, you got to keep comparing to that standard. So basically you got your defaults and then you got your alterations that you're allowed to pick from, but those need to be consistent. So yeah,
Okay.
there's about 6 different types of similar items that 125.7 covers. But yeah, it's not too bad. They are expanding the application every single round to add a little bit more context, a little bit more information right on the application.
Okay, so you're basically your sales are down 30%. You get 75% of your wages covered as a business.
Correct. Up to a certain maximum. So it's like $680 a week, basically, is the maximum per employee.
Okay, good. Hey, a reminder, guys, I'm here with Julien Grenier. We're going to be going through some other topical questions today about the programs for Canadian businesses, for employees. Please join us. If you do have questions, please throw the questions into the comments. I'm Rob Tatro from robtatro.com. I'm live here with Julien Grenier. I'm a portfolio manager at Canaccord Genuity Wealth Management and at the Tatro Wealth Advisory Group. Let's go to the next one, Julien. The Canada Emergency Business Account, the CEBA. What are the changes here?
Yeah, the CEBA is actually one of my favorite ones. It's relatively simple, easy to access, and I think this is one where the federal government, I think they did a good job with this one. So essentially, the CEBA is a $40,000 interest-free loan that doesn't need to be repaid until the end of December 2021. So you'd have a year and a half to repay it, 0% interest. And at first, the initial qualifications was that you had to have at least $40,000 of payroll last year. Okay, I should also mention $10,000 of that $40,000 loan is you don't have to repay it. So that's $10,000. That's a huge part of the program that I just didn't mention. But yeah, free $10,000, right? But yeah, basically the initial requirement was $40,000 of payroll in the previous year, right? Which is great, but between $40K and $1.5 million. So big businesses, this is not a program for them. But yeah, it was easy. You applied, you got the money within 4 days, and you had your $40K to spend.
Incorporated? Yeah, it has to be a corporation. Can't be a sole proprietorship.
Originally, you had to be incorporated. They eventually dropped that requirement to sole props, not-for-profits, the like. Okay, and then they dropped the $40K minimum down to $20,000, so it allowed a lot more people to qualify. There were still a lot of problems with a lot of business owners that have corporations that paid themselves with dividends, right? Maybe just husband, wife, local business, pay themselves not enough wages to qualify, but really needed the help. And so that's where they eventually came around, because this one took a lot longer, to create a different way to apply. So it now revolves around, so you still have the payroll one, so that if you got that, that's easy, get the CEBA. But the other requirement is they remove the payroll requirement, but then you need $40,000 to $1.5 million of non-deferrable direct expenses. Okay, so
direct. Your video's gone, but are you still there, Julien? Okay, so he was saying we'll work on getting Julien back here. I can kind of fill in a little bit here. So you need to have 40 to 1.5 million of non-deferrable expenses. The timeline, it looks like it's going to be on an annual basis, and it does seem that they will be reviewing receipts to actually see this. So that is something that's changed. It's a little more accessible now, but the rules have changed a little bit. Let me see here if I can get Julien back. Lost his power, looks like. He's going to be coming back right away here, Julien. In the meantime here, I'll take you through some of the other headlines here that happened today. I think the big things that are happening right now in the U.S., California closing their indoor restaurants. So that's something that, they're having COVID cases like we've basically never seen anywhere else. Obviously, there's a lot of COVID happening. And then I'm just chatting here with Julien. Yeah, okay, he's going to be joining back here hopefully soon. Oh, there we go.
Sorry, guys, lost power for a quick second, and everything sort of shut down. So the farmers will be happy that it's raining out, so they should be able to get that. But it unfortunately interrupted our show today.
That's okay. So I kind of finished the point with respect to the CEBA, the timeline. It looks like it's an annual basis. They'll be reviewing receipts. You need non-deferrable expenses.
Yeah.
Anything else you wanted to add on that point?
Yeah, I didn't really hear what you said other than those, but yeah, like they look like they're going to be reviewing this quite heavily. So make sure you have those receipts ready with you. But by and large, it's good to see that they've expanded that eligibility, because there's a lot of people that could have otherwise fallen through the cracks.
I remember when you first came on and we had our first show, I remember you saying it's kind of like, we'll just put this money out there and it's kind of the honor system for now, right? It's kind of the honor system and hope that people don't cheat. And now we know that they're aggressively going to go after the cheaters. Hey, Julien, do you mind trying to center yourself on the camera a little bit?
Sure. Yeah. My
camera just gonna. There we go. By the way, nice plant in the back.
Yeah, I noticed yours is a little bit bigger than mine, but it's
classic. I got the bigger plant.
Yeah. Next time I'm on, I'll make sure to have mine bigger for sure.
It'll be a monster plant. Let's talk about the temporary wage subsidy real quick. Just remind us what that is.
Sure. That one's it was their first one out of the gate, 10% discount on or subsidy on your wages. So that one's really easy to get. Basically, you get a 10% reduction against your source deductions that you pay. So if you get that 10% wage subsidy, it does reduce the amount of the CEWS that you're entitled to.
Right. You can't get both, or they offset. It offsets it.
Exactly. And then again, last time I was on, there was a weird application process for the temporary wage subsidy. You had to get it separate from the CEWS. They've now integrated the programs, making it much, much simpler.
Okay. Let's chat real quick. The work sharing program.
Yeah, I mean, that one is less popular today. Just basically, that one is for companies who want to reduce all the hours of their staff. Maybe they want to put everyone on part-time as opposed to going through the CEWS. The CEWS really became more popular, a lot easier to access. Work sharing, you got to apply. It's all through EI. It's only recommended in some minor cases.
Okay. Julien, I'm going to ask you to take us through the Canada Emergency Commercial Rent Assistance, the CECRA. So this is the rent assistance. This is new, as I understand it, right? You need to have
it was
new or something.
Absolutely, yeah. So this one is new. It's not new. It's new since last time we talked, for sure. And so it's one of the big ones that people were really, really kind of hoping for that would come out, and they finally came out. And it sounds like the feds were hoping that the province would step up more, and the provinces were hoping that the feds would step up more. And they kind of came up with this CECRA for people in Manitoba. I'm sure it saved a lot of businesses, but it hasn't been good enough for a lot. So the biggest one is you got to have a 70% drop in your revenues, which is quite significant if you think about 7-0, yeah. So a massive reduction. So if you think about restaurants and things like that, Manitoba hurried to reopen, basically. So you have your restaurants and things like that. Even phase one were open 50% of the time, right? Well, they're going to get 30% of their revenues through deliveries, through whatever. So unfortunately, not a lot of people were eligible for this in Manitoba. On top of that, your landlord has to agree to a 25% reduction at minimum for you to get this reduction in your rent. So essentially what happens is that the tenant pays 25, the landlord agrees to cover the 25% drop, and then the 50% comes from a refundable loan from the government to the landlord. Landlord has to agree to not evict any tenants, and really, like, it's something that can be very, very powerful, but at 70% loss of revenues, for those businesses, it's not just the rent that's going to do them in, right? So it was something that was, like, I wish was a little bit better, a little bit easier to access, because we have a lot of our landlords that are in a tight spot as well. Maybe they can't afford their mortgage payments or things like that with 25% revenues, right? Like, they might be right at capacity. So it's something that exists. And and it can be really good, but it's not exactly what a lot of businesses were hoping for.
Yeah, I don't know that many, that many successful CECRA applicants. I don't know any.
Yeah, I mean, actually, my wife got CECRA for 1 month with her hair salon. So
okay, I know one.
Yeah, there's one. So that was really useful in that month. But yeah, and then they're all back to work now, right? So
how is Laura's salon doing?
It's doing fantastic.
Yeah.
She's growing like crazy, and
best place to get your hair done, right?
Yeah, it's a beautiful thing. You can tell I get mine done there.
Yes. Yeah. Do they
No,
sell the Rogaine stuff so you can grow some hair?
You know what? I don't want to share any salon secrets, things like that. You should really book an appointment if you need. But yeah, they absolutely do everything. But yeah, she's doing great. She's expanding all the time. Just
nice.
So it's good.
Happy to hear that.
Yeah.
So the CECRA wasn't as popular as you thought it would be, as they thought it would be, obviously.
Yeah.
But still exists, and it's been extended as well, right?
Correct. Yeah, all of these have been extended, and like I said, the feds just keep month by month extending it as things develop, and as they should, right? So
yeah,
we don't want these benefits to continue for longer than they need to.
All right, let's talk about the LEAF. I'm not going to leave it alone. The Large Employer Emergency Financing Facility.
Yeah, I mean, I don't have a client with $300 million in sales yet, but basically it's just a financing program for large companies. So, yeah.
If you have you need 300 million in sales for that one, right?
That's the one. Yeah, that's
now there's some summer job programs, both federally and a Manitoba one. Do you mind taking us through those, please?
Yeah, for sure. So Canada Summer Jobs Program is something that's existed for a very long time. So I mean, it's something that we tell all our new clients about leveraging different programs that the feds or the province has. But basically, it's a program that covers usually 50% of your student wages. So if you're in the program already, unfortunately, the application deadline is always end of February. But if you're in the program, normally it covers you up to usually about mid-September and September, where students would go back to work. Well, now they've extended that until February of 2021. So that funding will continue for the entire year as long as you keep those students employed. And they've actually increased in some cases the amount that they cover from 50% up to 100%. So it's huge. Basically getting all of your money back for those students. And Manitoba, what they've done is they've sort of done something similar where they're going to, this is more so in response to COVID, they're going to provide up to $7 an hour to hire a new student between May and September 4th, I believe it is, up to a maximum of $5,000 per student. Okay, so again, this one is for new hires, not
it's got to be a new hire.
Yeah. But other than that, like great programs, right? So there's a lot of summer work, construction workers, things like that they can get up to $7 an hour reimbursed by the Manitoba government.
Can you get both? Can you get this Canada Summer Jobs Program plus the Manitoba top up?
No, you can't, unfortunately. Okay. So again, things like other subsidies and things like that, they reduce what you can get from the province. So one of the things that we didn't talk about before, like the Manitoba came out with the MGPP, which is the Manitoba Government Protection Program. So that's kind of a catch-all thing. So if your business was affected by COVID, but you don't fall under any of the federal relief programs, then they'll give you $6,000 tax-free. Sorry, not tax-free, non-repayable loan that you get. So it's just a free $6,000 if you qualify for nothing. So that's kind of good stuff like that too.
Yeah, that's neat. So those are these summer job programs. Reminder, guys, I'm here with Julien Grenier, partner at Talbot Associates. He knows a lot about the programs, and he's a great planner as well when it comes to your personal situation. Tell me about the BCAP.
Yeah, and I mean this is similar to, like, they talked about how the EDC would have lending for business owners and things like that. That's just kind of what they're calling their application. So it's dependent on each individual business owner and their own credit ratings based on how much and at what rate you can get. But that's basically the funding the feds made available to the EDC to lend out to people in need.
Okay. How about on the agricultural side, the agri-food, aquaculture, fisheries? What's new? What do we need to know there?
Yeah, and our firm does a lot of agriculture taxes and helps a lot of people in the agriculture industry. So we get a lot of questions about, okay, what's going on in the ag sector? And I mean, there are some things, but by and large, we're hearing a lot of, you know what, like we have agri-stability and different programs that are already available to help you guys in any disaster situation. So they strongly encourage people to enroll for agri-stability, which, if you remember on our last show, I strongly recommended that a lot of people get enrolled if they did have farms. But so with things they did extend the deadline to enroll in agri-stability up to July 3rd. Unfortunately, that's now passed. But what that allowed you to do is kind of wait till July 3rd to see how your crops were doing. You know, what does the market look like, and kind of decide at that point. So a lot of our clients took us up on enrolling on that and helped them out. There's also what's called an interim application. Now, the interim application has always existed for the agri-stability. So if you think you're having a terrible year and you'd be in a payment position, normally the interim application provides 50% of your expected benefit. Well, they've bumped that up where you can get access to 75% of your expected benefit. Again, it's not any money you wouldn't otherwise receive, but it's money earlier, which is kind of what a lot of people need right now.
Money earlier. Yes, yeah. I hear you.
Yeah, and I mean, there was also like each province, especially in ag, are doing a lot of different things. So Saskatchewan, you know, a lot of they're kind of have some programs where you can get some additional financing for end of life livestock operations. Manitoba didn't follow suit there, but on the flip side, Manitoba has, you know, entered into discussions with the federal government about agri recovery. So agri recovery is something built into our legislation that each province, or even less than each province, each municipality, even affected municipalities, could qualify for agri recovery, where it's basically an ad hoc program saying, hey, in this area they were decimated by drought, or in this area they were decimated by whatever, right? Flood, right? It's the opposite of drought. Right. So it's like, so they've asked the feds, say, okay, we want to put something together for the agri recovery program. So they're kind of in talks there. So there's no promises, but you know, each province is sort of taking their own approach to how they're going to help people. But the biggest thing, right? They're saying use your be in agri-stability, because if there's a major thing, that's the only way that they can really know how you were affected as a farm. And they've also, like, the agriculture minister, has outright said, like, look, we have Agri Invest, which is another program we talked about last time, which is essentially a matching program from the federal government, saying use that. These are times of need. You use your Agri Invest funds, which a lot of our producers already have. So,
okay,
yeah.
So, friendly reminder, guys, I'm here. I'm Rob Tatro from robtatro.com, portfolio manager here at Canaccord Genuity Wealth Management and at the Tatro Wealth Advisory Group. Pretty thrilled. Thrilled is the right word, because this is confusing and a lot of people do not get this stuff. I don't even understand all of it. So I'm really, really glad to have you on the show here, Julien Grenier. If you'd like to book a no obligation consultation with us, don't forget to go to www.speaktorob.com. We'd love to book something for you. Julien, your website, I believe, is, you just Google Talbot Associates. You'll find Julien. And there it is at the bottom. Look at that, Diego.
Very nice.
Yeah, pretty slick. I want to talk now about a CERB.
Okay.
This has been a word that's been tossed around a ton, and you mentioned it earlier in the show already. CERB, you know, what is it doing? What is it doing to our students? What is it doing to young adults that are struggling out there? Let's go again over CERB, what it is, the Canada Emergency Response Benefit, and take us through what it is and what we're seeing.
Yeah, so basically the CERB was basically for anyone who lost their job due to COVID-19, got this CERB benefit, which is $2,000 for every 4-week period, which again was great to get money out to people who needed it at the time. But now in a lot of places, we're kind of seeing the reverse problem, like I mentioned earlier. You know, employers competing against CERB to try and entice people to get back to work. So I know again, at the federal level, they are looking for a I was listening. The Conservatives were asking for the Liberals to kind of push something, a return to work program in. It's still unclear if they will, but like again, each province is tackling their problems separately. In Manitoba, they introduced the Manitoba Job Restart Program, or the MJRP. That's actually fairly new, which essentially will give you $500 if you say, okay, I don't have to go back to work, but I'm going to choose to go back to work. The Manitoba government will give you $500 as soon as you get a job, and then they'll continue biweekly payments over the next 6 weeks after that. So basically another $2,000 or equal to one CERB check, just to kind of get you back rolling, get you back going, to get you working in the economy again.
The CERB allows you to make, what is it, $1,000 part-time?
Well, it would be $2,000 a month, basically.
Right, but you can still qualify for CERB if you're making $990, right?
Yeah, exactly. So if you make $1,000 in the month, you can still or get the CERB. Yeah.
Yeah, I was talking to a friend who owns a landscaping company. He was telling me how hard it is for them to get employment now, because it's a lot easier to just stay at home and play your video games, work, a few days a month, make less than 1,000, then you get 2,000 topped up. You're making $3,000 a month. That's 36 grand a year. For a lot of these jobs are, the equivalent of $18 an hour, and they're barely working. So yeah, it's definitely an issue.
Yeah, I mean, we definitely see some companies get really creative, restaurants, things like that, saying, "Hey, look, we'll schedule you out so you don't make more than $1,000 a month, so you can stay on CERB," right? So we see that, but again, that's not necessarily the spirit of what CERB was created for in the first place. I don't blame the employers, because otherwise they don't have people to work in their restaurants or whatever. But again, like I said, it's not what CERB was designed for. I like to see these job restart programs and things like that, because to me, you can't stay on CERB forever, right? It's not sustainable. But like I said, at the beginning, it was great to get the money out. Now and again, right, we have a problem that's Canada wide, right? How do you say, okay, well, Manitoba, you can go back to work because your cases have been zero for the past 14 days. And then you got Montreal, that maybe it's not safe to go back to work and they still need the CERB, but you can't take away CERB from Manitobans when it's still in a different province, right? So it's definitely difficult, and I can appreciate the challenge, which is, like I said, why I really like the Manitoba Job Restart Program. I think it's good. And I mean, you have, people have a heart for the things that they see, right? And I see businesses trying to get employees working for them, right? And they can't. And they have reduced sales, and maybe their sales are down 29%, so they don't qualify for CEWS, and they can't get someone to work for them. So it's tough. It's tough out there for sure.
I mean, and someone's got to pay for that, right? Like and the bottom line is, it's got to come in tax dollars at some point, or recovery somewhere. Ottawa announced, there's an article here on CBC recently, that the Ottawa is going to post a $343 billion deficit. Spending hits levels not seen since the Second World War. Our debt load is going to hit $1.2 trillion next year. So this is, I believe it's about 18% of the GDP. So these are numbers this is like wartime numbers, right? This is when, we're rolling up our sleeves and we're willing to sacrifice everything to kind of, beat the enemy at hand, which was the world wars in the past. And this is a new form of war, I guess, I would imagine. But yeah, we're going to have to pay for that. Top tax rate in Manitoba is 50.4%. I mean, I would not be surprised to see a bump in both federal and provincial tax rates to pay for COVID, right? Someone's got to pay for this.
Absolutely, right, and it's unfortunate, but I mean, what we've seen is unlike a lot of what we've ever seen before, right? Like you said, similar to war times. Again, it's not ideal. It's not. No one wants to go to war. No one wants to have a pandemic, but we got to rally together. We got to do something. We're all got to pay our parts, and kudos to the people trying to figure it out, right? It's not easy to.
I actually think they handled it pretty well off the bat. Like, Canada's handling tax-wise and benefits-wise I think it was pretty good. I mean, nothing was perfect, but I mean, it got money into the hands of people who needed it relatively quick order. So
Agreed. And it's never going to be perfect, right? There's always going to be gaps. There's always going to be people who are left out or getting benefits where they shouldn't be or whatever. But by and large, I feel like they did a pretty good job.
let's talk about the CESB, the Canada Emergency Student Benefit. So this is for students, correct? And they don't qualify for EI or CERB.
Correct. So these people wouldn't have been working; they would have been in school. So basically, yeah, $1,250 for students that are in post-secondary, basically college, university. So they weren't working; they didn't qualify for CERB. They weren't getting EI. So $1,250 for those students. So and then you get an extra top up of $750 if you're disabled. Okay. So this is also continuing side by side with CERB. Again, no indication as to whether it's going to stop or not. I think we'll see a lot change depending on what the schools do, if they're going to have people come back to the.
What do you think? What do you think is going to happen with schools?
With schools, yeah, I mean, like it's interesting, right? So because they've done all this work to put their classes online, and they've adapted and all this kind of stuff, right? So I mean, it's hard to see people just rushing back to school. I think they'll take their time. I think by assuming no major influx in pandemic, I think we'll see them go back to regular classes in, post Christmas break kind of thing. But at this point, they've already adapted. They're already online again. But there is something to be said about being in class, making those connections at university. And I'm sure you probably still have friends from university today, Rob, right? So I think in class sessions is something we'll see again in the future.
Yeah, my wife's a teacher, and they, I mean, the hard part I think is that you also have to teach those kids at home, right? So if you're working and you have a family, we have 4 kids, so like I know how hard it was for my wife during COVID teaching. So you're teaching remotely, and then you're also teaching your own kids at home. It's I know it was very, very tough, and it's a lot of work, and I so much props out there to the teachers that are doing this, because it is not easy. I have some buddies that are teachers, and they were telling me some of the stuff they're going through. They were telling me about smaller class sizes, distancing in the classrooms and stuff that they're talking about doing in September. So I'm kind of curious to see how that's going to go down.
Yeah, and there's so many heroes in this story. Teachers, absolutely hats off to them. They completely changed the way they had to work. Your frontline workers, all that kind of stuff. Like it's incredible. Like I was talking about how blessed we were with our team and how well they've adapted and things like that. But like, yeah, every industry has had to adapt quickly, and they did, and it's amazing, right? Like you can still go to the grocery store, you can still do all the things that you used to be able to do, but just a little bit different. Accountants, yeah.
No, you guys are important though, seriously.
No.
Student funding. You want to talk a bit more about some other topics, Julien?
Well, and I think the other things here, again, student funding, student loans, like any loans, mortgage, interest rates, right? Those were one of the first ones that kind of got deferred, all that kind of thing. So I mean, if there's any questions about it, I feel free to shoot me an email or something like that. But again, those ones are kind of your first types benefit. Increases to Canada Child Benefit. People should have already received their checks already. Same for the GST. Seniors came a little bit after those guys. So seniors are receiving an extra a few $100 a month as well, just to help with some of the challenges that they're all facing, right? So again, those ones you don't have to apply for. They're just available to you.
Okay.
Yeah.
I may have told you this before, Julien, but if not, I'll tell you now. I have a bit of a beef with accountants generally.
Sure.
So the problem that I run into in my business, I don't want to say regularly, but quite often is that accountants are incredibly smart. We know that. You guys are very, very smart. You know your rules. You guys are dedicated to keeping on top of things. But one of the things that I typically see in accounts is the lack of proactive advice, right? So you'll sit there, you will answer questions, right? Can I deduct this? Can I do this? Should I do this? And a yes, no answer is quite easy for you guys. But what I find is there's rarely proactive advice. And, you guys are rarely trying to walk a mile in your shoes. And the reason I'm mentioning this is for you guys that are watching out there, is that's what I love the most about you, Julien, and your firm, is that you guys are incredibly good at proactive advice, which is trying to uncover problems before they happen, trying to actually problem solve and be creative and actually think and walk a mile in the client's shoes as though it were your own. So I love that about you guys, and I love that about your firm. So I just wanted to give you a props for that, Julien, because it's critical in my mind to have that proactive approach.
And I appreciate you saying that, because we work tirelessly to try and be proactive, and it's one of those things that is really important to us and our culture and what we teach our staff, because like there's a million programs out there, right? Like it's difficult to stay on top of all those things, but it's incredibly important, right? And I always tell my clients, right, like I'm doing my best to get to know you and ask you questions to see what kind of benefits or credits you'd be eligible for, what you could deduct or can't deduct. You know, we send them links to seminars that we do, and actually we've launched a Facebook Live kind of campaign, kind of going over some tax tips, stuff like that. We're posting out some weekly videos, so check that out if you guys are interested. But you know, it's about learning the client. But if ever my client finds out about something, I encourage, and they didn't hear it from me, I encourage them to let me know about it, because it's important for me to learn about it and kind of digest that information that can be quite complicated in some cases, right? So if you think, if you're my client and you think you qualify for something, send me the link, send me the article, I'll digest it for you and kind of really explain if you do. But then we wanted to try and go a step further and kind of either add it to what we call our management letter, which all of our managers will present to our clients in the firm, and we'll try and update our newsletter and kind of get that information out. So it's incredibly important that, you know, being proactive is a two-way street, and I'm glad it's something that you've realized. So thanks for saying.
Yeah, for sure. And I always tell my clients, like, I'm big, very, very, very big on being proactive on the wealth side, right? Mm-hmm. So I want to know as much about you as possible, because, you know, it's pretty easy to just build portfolios, or I shouldn't say pretty easy, but you know, that's part of what we do. But what's really, really fun, what kind of gets me going, and what I really, really enjoy is, you know, looking in someone into the eye and telling them, wow, because we can implement this, you're going to save X many dollars on your estate transfer, or you're going to pay less tax, or, you know, you're going to get a capital gain exemption, or whatever we can do on the wealth side. So for me, it's a huge, huge part of it. And it's good to see others in other industries doing the same. So,
and that's why, and that's why we love working with Canaccord and your team, Rob. Like you guys always have that heart on your sleeve, care for the client. And like you said, very proactive. And so I feel like that meshes well for sure.
Good. That's enough tire pumping for each of us now.
Fair enough.
No, you guys are good. And I appreciate you coming on the show. I did want to maybe run through some basic corporate planning strategy, but you know what I'll do, Julien? I think I'll save that for the next time you're on the show.
Sure.
And we'll go through next time you're on the show, we'll go through, you know, why people incorporate. And I do know that you guys set up a Facebook page. You got a Facebook Live on that. So if you're looking for advice on that, feel free to check out Julien's page. Anything else you want to touch on tax-wise before we shut her down for the day?
Well, yeah, and that's the thing. There's lots, right? So if there's extra questions that come out afterwards, right, you know, feel free to send them my way, and then I'd be happy to help out in any way I can.
All right, I always do. So, guys, that's it for the show. I'm Rob Tatro from robtatro.com, portfolio manager here at Canaccord Genuity Wealth Management and at the Tatro Wealth Advisor Group. I had a great time today with our guest, Julien Grenier, talking about he's a partner agricultural team manager, and he also runs the Ashern branch. He's one of the partners over at Talbot Associates. I had a great time chatting about the multitude of programs that have been put in place by the government to help us through COVID. If you would like to book a no obligation consultation with us, go to www.speaktorob.com. We'd love to book a consultation with you just to have a chat and see if we can help improve your wealth, your portfolio, your returns, anything on the advice side. We are here for you. So thanks so much, guys. If you're watching on YouTube, take a sec to subscribe. If you're watching on Facebook, please like, follow, and share. I think I said the right words there, Mox. Hopefully I did. We appreciate you guys tuning in. We love having you guys watch our show. And please stay tuned. Monday next week, we have Scott Chan. Is that right? I believe we have Scott Chan coming next week. He is our financial analyst. He's one of our analysts. So we have, I don't know, like hundreds of staff at Canaccord here that do analysis. If you're a regular viewer of the show, you've watched Martin Roberge, you've watched Javed Mirza, you've watched Tony Dwyer, you've watched Kevin Vandermeer. So this is going to be an individual who specializes in one sector of the market, and his specialty is financial companies, bank stocks, financial companies, insurance companies, all the financials. So really, really excited for that. And we're going to try to bring on more analysts like that in the future. We love having you on as well, Julien. Next time you and I are going to chat about corporate structuring and
Awesome.
why people incorporate.
Yeah, I'd
All right,
love
thanks
to.
so much.
Thanks,
Appreciate it, Julien.
Thanks a lot. Take care, guys.
Thanks, guys.